Good evening, ladies and gentlemen. This is Stock Report, and this Stock Report is produced on Good Friday, and it is 6th of April 2012. Let's look at the reflection of the how the stocks have been performing in the past. Well, the stocks have been down all around the world uh, prior to Good Friday. That's on Thursday, and before that, the following week. What is told for the future? Uh, well, it has been seen that the European contagion effect and so forth, and there has been a turmoil in the European market, which is going to directly impact and affect the America in the coming. But as I had mentioned, the Americans have market has shrugged off the contagion effect. The underlying contagion effect it does affect because of these turmoil in the European sector has affected the American markets, and that is showing a fall in the American market. Well, the good news that is on Good Friday that I'm going to give you, the stocks will rebound on Tuesday following this Easter Monday. The the stocks will rebound, and so if you had purchased the stocks on on Thursday, these stocks will bounce back on Easter Tuesday and so on in the following week. So it's a good news. The the bad news is the ratings agency Standard and Poor's is uh, has shown some biasness in the release and the rating um, of larger financial institutions and organizations in the countries as well. So if Standard and Poor's restrict itself to American market and rate its own market, it will be much more viable. The biasness is shown to the to the American market rather than to the European ones. So there has been a lot of enchanting and a lot of um, disagreement with the large financial organizations, institutions, and even in countries. So Standard and Poor's has lost its credibility as we had seen before, and that this agency is um, has got a bias associated with it when it releases news. The biasness is shown towards the American markets. What uh, is important and what a better rating would be the if you look at trade deficit and trade surplus of a particular nation, and if you did a trade deficit per capita or trade surplus per capita, it will give you a better indication of how a particular nation is performing. This is an important a figure that uh, is not used for rating, but if you really consider and look at the depth of the uh, and if you worked out the trade deficit per capita or trade surplus per capita, then you will see how the nation is performing. And in some of the Asian nations, as I had mentioned before, for example, China, um, the trade surplus is far more, and it's a good indicator of how um, the country is performing. Forget about the Standard and Poor's rating because Standard and Poor's does not consider this type of rating. Okay, and consider yourself as a global citizen rather than um, a particular nation. Um, let's look at the word of advice and caution for large corporations and companies. As I had mentioned before, if the Americans' uh, legislation and the laws, the legal arms of the tax laws and the revenue collections and so forth is such is to penalize, is to raise uh, money, raise coffers for the government by increasing taxes and holding the tax rate high. If those tax rates are reduced, then it will stimulate the economy. As I have mentioned, from 35% go down to 20%, the stimulation of the economy. That's tax rate for the companies. If it's brought down from 35 to 20%, then the stimulation of economy will reach close to full employment level. And at the same time, the deregulation of labor market will lead to that full employment capacity, and the economy will start to move in a positive direction. A warning and news, good news even for the larger corporations and companies. If you are being penalized by staying in a country or regime, operate like multinationals, have a multinational arm, and please do move around the world. You could have a partner company in overseas uh, under in their and please not have the head office if you're running a partnership country. Let it be a foreign company and have the head office elsewhere, not in US. So that will prevent the arms of the law of this nation taxing you, because you are foreign owned company and operating in foreign country. I mean, as I've said before, foreign owned companies and operating in foreign country, the Americans uh, taxation, state revenues don't have any legal right over them. So if you do operate in that particular fashion, then you have removed the arms of the law affecting you. And the companies, it is most wise to operate wherever in the world provides you with great tax incentives. Once the money is moved out of the country, it doesn't have to be repatriated back into the nation. The politicians are talking about repatriation of money. I'm talking about depatriation, meaning do not repatriate those money, because once you get the money from the foreign source back into the nation, you will be taxed at a higher rate. So the money has to stay overseas in a foreign country under the foreign banner, under the foreign company name. Absolutely no reason to repatriate this money. So the global citizenship I have been talking about. Okay, how the stock's going to perform? The stock's going to perform fairly well in the next month or so, and for the next 2 weeks it will perform, and then it will come down a little bit towards the end of April. We'll be looking at, but yeah, the word of advice is, and the caution is, prevent yourself from being taxed at a higher tax rate. So the American companies, be wise, have subsidiary partnership companies, head office in a foreign office, in a foreign country, which will prevent tax leaks from your company. And I shall see you in few weeks' times, or early May. Thank you very much.